stock market's overvalued. Pretty much of this fact can be tested by the reason why the Warren Buffett is not investing in the stock market right now. Yeah, everyone knows that he's sitting on almost 300 plus billion dollars of the cash file, uh, which is actually invested in the US Treasuries, which is a kind of the same thing as cash. If we think about it in this scenario, then why the hell he is not investing that money in the stock market? Yeah, everyone knows that the basic philosophy of the Warren Buffett is the intrinsic value. You finding the intrinsic value, finding the value case. Because the only thing he cannot do is that he cannot buy an overvalued, overpriced stock. So if he is not putting the money in the stock market because of the overvaluation concerns, then yeah, the overvaluation is there. Then the stock market is actually overvalued. So the numerically another factor that can be used to understand this phenomena is the market cap of the United States stock market to the GDP of the United States. Yeah, it is reaching about 170% level, and it is pretty much at the overvaluation level if we look at it historically. This ratio is actually not so much logical reasoning. It does not have actually logical reasoning behind it. I personally think that but somehow it works. Somehow it shows that the market is overvalued, and it is also known as the Buffett indicator, also, in which is used by the Warren Buffett himself to gauge the overvaluation in the stock market. So let's talk about what are the factors that are contributing to this overvaluation in the United States stock market. One of the most common factor, which is known, is the Magnificent Seven stocks. These are the top 7 stocks in the United States stock market, and they make almost 33% of the S&P 500 index, almost one of third. But and also they contribute 18% of the total volume in the total stock market trading volume. So the factor I am looking at here is that how these stocks are too much considered as overvalued. I'm not saying that this is a bubble. These stocks are not a bubble. Some are worthy to hold, but why these stocks actually contribute to the overvaluation in the stock market? One of the main reason is that these are the household names. Every other person knows about that. Every other person knows about Apple, knows about Microsoft, and yeah, whenever person which is new to the investing is pretty much need to hold these stocks instead of doing some research on the individual stocks, the other stocks. So this the actually exacerbates the minus investing, and this actually contributes to the overvaluation in the stock market. In this analysis, I personally cannot deny the fact that these are the ghost stocks. Their PE ratios are reaching the sky highs. A part of overvaluation is largely for these stocks because the nature of the ghost stock is that they must be a little bit overvalued in terms of their earnings to show the potential to the investors. So, but too much overvaluation can be attributed to some stocks of this category because some does not hold enough potential but still works, the overvaluation works for them. So, yeah, they are specifically causing the overvaluation in the stock market. And yeah, when I'm talking about the minus investing, then we cannot overlook the fact that there's a passive investing culture. Yeah, the passive investments, which can attribute to the ETFs, exchange traded funds, and the index funds. Investors hold them kind of indefinitely because to reap the benefits of the stock market without actively managing the money here. This market actually makes about 50 to 20 trillion dollars probably, and right now the US equities under management almost can be attributed to 50% of the passive investments. So this market is very huge, and the question is how it is contributing to the overvaluation in the stock market. Investors are putting the less effort in the decision making to hold these funds, to hold these equities. Yeah, which is kind of contributing to the artificial demand in the stock market, regardless of the fundamentals of the portfolio companies. So it is actually a bad thing for the stock market itself because, as I said, fundamental the demand of the stocks is divorced from the fundamentals of the companies. But uh, these privileges are getting masked by the privileges of low fees by these investors, by the passive investors. Because on the other hand, the mutual funds, the hedge funds, and other investments charge higher fees, but the ETFs and index funds charge lower fees. And also, investors are disappointed by the underperformance of the active managers. That's why they chose to hold the passive investments. And yeah, this problem will get more and more mm, problematic because as the passive investments, the capital inflows in the passive investments will become higher and higher over time, which will be the case right now, can be predicted. But as the capital inflows will be more and more in these investments, these indexes, which are the benchmark indexes for the active managers, they will outperform the active managers more and more, and which is kind of making the uh, imbalance in the stock market. So now let's talk about the other side of the overvaluation. Before I talk about the long term to medium to long term overvaluation in the stock market, which happens at the broader stock market level. But now let's talk about the short term, the overvaluation in the market, which actually happens mostly at the individual stocks kind of level. So the temporary overvaluation happens in the stock market, and the temporary overvaluation can be caused by a lot of strategies, which can be the meme stock trading, the penny stock trading, and the other ones. But one of the most common and one of the evenly kind of which contributes to overvaluation evenly through the time is the options trading. Yeah. And also it has huge retail investor base. It contributes to the overvaluation evenly throughout the time. And this can be tested for this analysis. So what happens in the options trading? Yeah, there are two kind of options, the call option and the option. The call option are used by the traders when they're speculating that the stock price will go up, and the put option will be used otherwise. So when there is a sentiment in the market that the stock price of an individual stock will go up, then the what traders will gonna do, they are going to buy the call options from the market maker, and the market maker charge some fees, some premium, the stock option premium. But when this sentiment is actually kind of real, and it is kind of tested for some time by the market makers. What market makers are going to do behind the scenes is that they are going to buy the individual stocks against those options. Uh, this makes some kind of the buying pressure, and as the time passes, if the sentiments turns out to be right, the market makers gonna buy more and more, and this causes overvaluation in the stock market. That's the stock price of the company. But you may think that this other side of the story is the put options. Yeah, this is the double-edged sword. If it can cause overvaluation, it can also cause undervaluation. But why I'm including this in the analysis is because since the 2019, the stock buying pressure and selling pressure in the different seven stocks are because of the options trading increased from 3% to 54% almost. Yeah, this now you can I can literally say that the 50% of the stock buying in the Magnificent Seven stocks is because of the options trading. Yeah, and this and over over this time, most of the time, the put to call ratio, which measures the put options against the call options. And when this indicator is low, the market is overvalued. When this indicator is high, the market is undervalued. So it stayed around the overvaluation point. Yeah, it is stayed low since the 2019, occasionally reaching the higher levels. So this also tests out that the market is overvalued because of the options trading also. Yeah, these are some reasons I personally think that cause the overvaluation in the stock market. And if you like my analysis, then don't forget to show some scot, and also tell me in the comments that what do you think about this phenomena. And yeah, bye.